afternoon, and welcome to the September 2nd, 2022 edition of News from the Front Lines of Business by D.W. Huff Consulting, where we help you know your numbers so that you can grow your numbers. So another week in the bag here. September is upon us. Another calendar keeps changing quicker and quicker. But anyway, kind of a quiet week, I guess, as far as news goes. We do have the extended deadline for corporations, September 15th, so if you don't already have that in progress, that's why we probably a little bit busier and more tired than normal this week. But some things that came up. So within discussions with our clients here, we talked about self-directed IRAs and that kind of thing in the past, but I guess we want to spend a minute looking at kind of differentiating and explaining what exactly we mean when we call something a self-directed IRA. We had a discussion this week, and a client had a brokerage account at Fidelity, and they pick in their own investments. So this is not something that was managed by like a financial advisor. They were picking their investments. They were of the opinion that is self-directed. So it's although you're choosing which mutual funds or stocks are in there, that's really not what we're talking about. You don't really have control. You're buying a mutual fund. So when we're talking self-directed IRAs, we're talking about where an arrangement where you really have control of the assets. So by that we mean ownership in a small interest in a small non-publicly traded business, rental real estate, investing in different types of notes payable and receivable. Actually physically, you can actually lend money from these type of environments. So a self-directed IRA is different from just an IRA that you kind of self-manage at a regular brokerage account. So it's different between, I guess, a Wall Street type investment, stock, bond, mutual fund, versus a direct investment in real estate or a closely held business. So the two things are very, very, very different. But and I guess we always want to keep more control of assets. So it goes back to the personality of the investor. If you're accustomed to working a job, maybe not, for lack of a better word, getting your hands dirty in investments, Wall Street accounts may be the way to go. So we've seen those illustrations before where you hold stocks in these equity type investments, and you let the company do its thing and dividends, and a well-run company is going to make you money over time. But you don't have a lot of control, right? So there's a CEO, there's a board of directors of that company, and you own the stock. So in theory, I guess there are some voting rights there, but you really don't control that company like you do if you took some self-directed funds and you bought an interest in a small, lawn care company. So now you can't actively participate in it, but you could definitely be the funding source for a small, closely held company, and that operating company can go out and do their thing, and you can reap the return on the investment out, but you have a lot more control in that environment, because here you're now going to be picking and choosing who operates that company, have a little more say-so as far as control of how that small entity is run. So it's a big difference there. So good control, and I think a lot of the people that that I listen to, at least, they don't like giving up control of the money. So when things go on, they don't want to just kind of be along for the ride. When you look at the stock market, how things are all kind of interrelated, and while it's generally good, I guess the more high octane, hands-on type people are going to want to have more control, more real estate, rental real estate and that kind of thing, and just really have more of a say on how things go. And theoretically, that should generate higher returns, but also with higher risk. So just understand the difference when we use that self-directed term here. Also this week, this is actually not really a new item, but something that was brought to my attention once again here. QuickBooks. So QuickBooks is owned by Intuit. Intuit owns some tax preparation software. QuickBooks, as well as the desktop version, as well as the QuickBooks Online version. So they got a lot of market share in the accounting space. But if you're a small business, the choice when you're deciding which way to go with your accounting records is, it's pretty much would be QuickBooks Online versus QuickBooks Desktop. And one of the advantages of the desktop is that if you have a bunch of companies. You could buy it once. So typically back in up until now, it might have been $300-$400. There's different flavors, I guess, but $300-$400. You buy it, use it 2 or 3 years later. You might need to update, but you don't need to update every single year. So when we comparing that to the QuickBooks Online subscription model, we didn't like that as much in some scenarios because of the ongoing cost. Well, now the desktop version is similar in that you buy it once, and yes, you do host it on your computer or on a hosted server somewhere, but they are requiring you to now repurchase it once every year. So it's still less expensive than desktop, but the two things are kind of starting to equalize a little bit now. And they have ways of monitoring. So I think some people in the past have thought that we buy the desktop version, we install it on our own local computer, and we should be able to use it regardless of whether or not we renew the subscription. And that's actually not the case. So that's something that was just brought to my attention, is that you log in the first time you install it with a QuickBooks, with an Intuit account. And every time you log in, what's going on behind the scenes is that the program goes up to Intuit server, verifies that you are currently licensed and you have a current subscription in place. And if you don't have those things in place, it will not let you open the program. So even though it is installed on your computer, now they have a way of controlling whether or not you can open it. That's determined by whether or not your subscription is current. So it's going to be more expensive. So now every year you're going to have to get a new subscription, and there are updates to add some new features every year. So it's probably not the worst thing to do, but it's definitely not going to be as low of a price as it was in the past. So they're figuring out a way to squeeze more money out of you, and that's Intuit's a big profitable company now, making all kind of acquisitions and all kind of other small business applications besides just the accounting side. They're moving into MailChimp, which is a marketing program now, and a couple other areas. So big company, and it really got kind of a stranglehold on you, because really when you look at the alternatives, really QuickBooks is, particularly the desktop version of QuickBooks, is the most well developed program out there, and it is still competitively priced to other desktop apps out there. So we just it's just not as good. So it's got to deal with it. But I definitely wanted to point that out to you, because it's getting a little more expensive. So that's it for this week. I'm so tired from dealing with taxes. I'm gonna get out of here and enjoy the Labor Day weekend. But just for a reminder here, a quote that I think initially came from Seneca: "Luck is what happens when preparation meets opportunity." So, and it goes back to that. I've heard that saying, the harder I work, the luckier I get. So keep that in mind when after you recover from your long weekend here, and get back to it after the post Labor Day work schedule. So hope everybody has a good little Labor Day weekend, and we'll see you next week.